Yo, what up, everybody? Welcome to a new educational session. We're going to be talking about time frame alignment, and we're not going to do a PowerPoint slides or anything. We're going to do straight simulation session so I can explain with my thought process what we're waiting for when you're trying to trade and waiting for those time frames to align with each other. So let's create a session, and I'm using a different simulator this time. Let's do a 100K account, and we're going to do obviously DXY and Euro USD, and we'll put in GBP USD as well. So we have that correlating assets, and we'll call it time frame alignment. It's 1L. Not sure if it's 1L or 2L. Doesn't matter. So let's pick a random date first. As always, it is a December, so I really don't want to backtest December. So let's go to another date. November. Let's just do it. November. All right, 7th of November. Which was it? 2022. Yeah, 2022. 7th of November, which is after NFP week, so that's good because the first Friday of the week is NFP. All right, so let's start off with this one. To the downside. All right, I like this simulator because now I have a sort of a trading view style simulator instead of the software FX, which I normally use, which is a MetaTrader backtesting software. All right, so we skip Monday as always. So let's put the time on London or New York because we need New York time obviously for our trades. And let's skip to the next day. I think we're now going into another daily candle. Oop, yes, so Tuesday. Now, what we're going to be talking about is this is a technique you can use to determine order flow. We want to go into our POI where we want to trade from. Let's say you are bullish, right? You wait for a discount array, higher time frame to get hit, and then you wait for all the time frames to align with each other. And I'm going to show you how you can wait for that and when a higher probability setup can form. So what we're seeing currently, obviously from the back of my mind, I know this is consolidation from the end of 2022, which is fine. But looking at the structure, we rated this high over here, right? So we have a intermediate term high formed here because we have another short term high to the right of it. So we can assume bearish order flow on the daily time frame. If I look at the weekly, weekly is also looking good for bearish price action. We're going down from this order block here. We're not really moving away from this fair value gap, indicating for me lower prices more probable. Let's go to the 4 hour. Right, so we have this big imbalance over here, which is being respected and traded away from. Every up down close candle should support price higher, which it doesn't do. So we can assume we are going bearish, right? So now we have time frame alignment on the weekly bearish, daily bearish, 4 hour bearish. Let's go to the 1 hour. We want to be in a premium to sell, right? So let's go to New York midnight first of all, so we can have our daily opening price and start to look for setups, right? 2, 1, and this is, because it stops at 59, it's kind of annoying, but I'll do 1 minute and then we have the opening price. So this is New York midnight, right? So let's do our daily dividers so we know what the day is. Right, so we start off on Tuesday, right? This was Monday over here. Monday had a nice classic sell day. It went above daily opening and then dropped. Right now we're leaving a relative equal lows behind, which is nice. So we have a target, right? So we already have determined what we can trade towards, which is the sell side liquidity. Let me save this one. SSL. Right. And now we do the opening price. So we want to be a seller above, right? As always, that's one of my rules. And we want to be a buyer below it. So ideally we run up at the start of the day, creating the power of 3 of the daily candle, and then continue down lower, right? So right now, 1 hour time frame is bullish. Why? because we are not respecting this one here. We're closing above or slightly inside still, but you can see we're starting to form bearish candles which push price up higher. So we need to wait for the 1 hour to also go into bearish order flow. 4 hours still bearish, but we might reach into a premium for the current day. So I'm seeing a 4 hour fair value gap here, right? So this is a potential area where we can look for shorts. If I look at the 1 hour, let's go to London kill zone, which is 2 a.m. 1, 2 a.m. right? Still bullish, respecting this, disrespecting this. So we're in bullish order flow. So let's see if we can reach the POI, and then we're going to look for shorts, right? So now we're going to wait until the 1 hour lines up with bearish order flow. So think about time frame alignment again, right? Everything has to line up for a high probability trade. So let's see. We're going up. Okay, now we're closing pretty. We didn't go into the POI, right? But now we waited patiently, and the 1 hour is disrespecting this candle over here, which should be supporting price higher. We rated this high, but we failed to go into this high, which is fine. So I can count this as a turtle soup. So let's call it soup, right? So now we have a soup. So now we can potentially assume that this is high of the day, or at least high of the session. We are at the end of the London kill zone, right? Because it's 5 a.m. So best thing to do is wait for a New York session to take a trade. Let's look at how that looks on a 4 hour. And so yeah, 30-minute displacing. Also the displacement is a good indication, right? We've got a bearish order block formed over here. And now tell me why you think this is a solid order block. I'll give you a hint. Because we rated a high, right? And then displaced down lower. Displacement indicates for me they're showing their hand. They want to go in one direction. And it is the start of a new dealing range, right? The new dealing range always starts with an order block. Obviously, a rejection block and old high is attached to it, but the order block is important. You want to see that. So that's why a liquidity rate, which forms a new dealing range, makes it for a higher probability range. Right, so we're still watching DXY, right? So we kind of want to go and trade euro. Maybe can we trade this as well? I think so, right? I think we can not even trade EU, we just trade the DXY, that's fine too, for educational purposes and backtesting. So we're outside of the kill zone, so ideally we don't want to trade right now. It's looking good for downside, and we're gonna wait until we can get into premium of a new dealing range, right? So potentially we're forming a new dealing range right now, and we want to return back into premium. We have very easy lows down here, so hopefully we don't run straight to it. That would be a shame. So I'm gonna wait. So let's skip until we get to, okay, or early already. We're gonna see if we can take a trade outside of the kill zone. That's fine too, because you can take a trade outside of the kill zone, but you have to anticipate it can consolidate or move slow, right? That's why we trade with the kill zones, so we know the volume is there to support us with our trades. We have a 15-minute fair value gap here in premium, which is inside the order block, which is a good area over here. So we're going to wait for all the time frames to align. It's going to be a long wait, but we need to go back into this one. Let's see if we can do that. Let me skip 5-minute candles. And let me narrow it down to the 5-minute range. We just souped this high, right? Let's see. Right, so right now, 1 minute is turning bearish again because we're respecting fair value gaps, right? 5 minutes is turning bearish. We souped a high, so ideally we liquidated this range, and we are not respecting this block over here. We didn't close above it either. Unfortunately, we did not go into premium of this range, so we're going to do two things. Now we can anticipate, let me see the 30. We have no top wick on the 30 and the 15 minutes, so let's just wait for New York kill zone and see how that develops. So we don't want to be too early. We really want to be in premium actually. So let's wait for that. Right, so oh, we almost tapped it, but did we go to premium? Let me zoom in a little bit. Right, if I take this line, I think we barely didn't tap premium. Now the thing is, I can look at Euro USD and see if the same range tapped discount, and I think we might see that. So let's see. No, no discount tapped, so we can assume it can go a little bit lower still on DXY. Right. Let's look at the 5 minute. We're still respecting this down close candle here, so right, we're about to disrespect it. So in essence, we're forming a breaker if we close below it. So now we're lining up the time frames. 15 minutes starting to go bearish. We're holding this order block, right? Doesn't have to go into the inefficiency, so we can assume it's bearish. 30 minute is bearish. 1 hour is bearish. 5 minute starting to go bearish. 1 minute is definitely going to sell side of the curve right now. So we can assume we're going into sell side of the curve. So what is the time? Time is important, 6:19. So still outside of the kill zone. What we can do is see if we can enter already, but we use a little bit of a wider stop loss because our target is all the way down there, right? So the RR, and we have this sell side down here as well. The RR is pretty good, right? So it doesn't matter if you enter here and then put your stop loss on the high, right? That would be like a 22 pip stop loss or something, which is still fine if you trade a longer range target, right? So we've got that sell side here as well. And on the daily time frame, yeah, we're aiming for this imbalance down here, right? So there's a lot of room to go down. So it doesn't matter if you wanna take a little bit of wider stop loss. So that's what we're gonna do. We're gonna put our stop loss above this high, which is 110.63. We'll do 110.63. So order, sell, and then stop loss is. Can we trade DXY by the way? Yeah, right. 110.336. That's where we are on a market. Oh, it actually does it like that. Okay, so the stop loss should be 110.63, so wider stop loss, 110.63. And then we're gonna aim for the imbalance on the daily time frame, which is down here, which is 109.28. 109.28, which is a 1 to 3.5. And we're gonna scale in obviously with another position. So let's execute that one. And let's watch the 5 minute time frame. So this looks like a bad entry, but we're seeing all the time frames align right now, so we just have to let it run in this occasion. So if we do go back into premium again, we can still wait for another time frame alignment, and then we scale in a position at a better place. Right? Okay, so now we actually, if we waited for the kill zone, right, that's why you want to wait for the kill zone, we actually went into the premium gap. Let's go to the 1 minute. 1 minute is, we don't have enough structure yet, but we can assume this will go bearish. So let's see how that develops. Right, if we leave this high intact, it would be beautiful. Right, we're starting to respect premium of this leg down. 5 minute, if we close on the 5 minute below this candle over here, we can assume we're gonna go bearish, right? Because this candle, you ideally want to see it move away from. So it's probably gonna go for this imbalance down here, right? And I think we can scale in another one right now, because the 1 minute is turning bearish right now. And where would we want to scale in? Ideally, we can scale in over here, right, in this imbalance here. So let's see. I'm still going to put my stop loss above here. I see no reason why we should go there. So we're going to do that. And then this position will take a 1 to 2, right? Just go for the low-hanging fruit lows, and the other one will let that one run, right? So place order, limit, and 1%. Yeah. Right, so we have another order put in right here. Let's see if we can get tagged. Okay, we get tagged. Right, it went a little bit deeper than expected. That's fine. Oh, let me remove this indicator, by the way. Let's see what is the time. It's kind of choppy right now. We're still above daily opening price, see? Because this is the line for the daily opening price, New York midnight. But the 5-minute is closing below these candles here. So we can assume after this rate on this high, it's still remaining within the imbalance. Let's look at the 15, see? The bodies are still respecting that imbalance. So still bearish. 30-minute, 1 hour, still respecting the dealing range. So we'll just have to let time play out right now, see where we go. Right, so we're dropping, and we need to wait until we have an indication. We can go break even once we take out this low, because then I would assume this range won't get revisited. So, alright, so first target has been hit, right? Now I assume that this, because the imbalance is created down here, we can put a stop loss back at break even, because it makes no sense to go into this again, right? So do you see how the time frame alignment can set you up for, if all those align with each other, you can have a higher probability of price going into your direction. And obviously these were equal lows, so a very easy target. And yeah, let's just see if we can go all the way into the imbalance or the sell side from down here. And then we'll wrap up this short little explanation for time frame alignment. Yeah, let's let it run. I went all the way down here. See, now I will count this. Let's see, how much are we up right now? We're up 4.5%. Pretty good for, what is this? Still the same day, right? No? Yeah, still Wednesday. So this is one day. You can, if you put on 2%, which we did, it's now 4.5%. Let's see if we can go below. Right, tap sell side. And we tapped sell side, right? So what you can do, wait a few minutes, maybe it drops further. Yeah, it drops further. Right, and we'll close here because it's almost at target. How much? Oh, it's 10 more pips. No, we'll close here. Don't be greedy. 5% in one single session is enough. Right, close. 100% of the trade, save, done. Right, let's show the executions on the chart over here. And I will break down a little bit this piece of price action over here and why this would be high of the day, right? And going break even too soon is a mistake, right? So what would you do better in this occasion? We looked at the 15-minute order block, right? We entered early in discount. You don't really want to take a trade in discount, but sometimes price is so heavy and it will just move away from you. So we entered over here with a late entry, right? And we put our stop loss at a logical place, not at these highs or at this high anywhere, right? You want to place it at a stop you want to place your stop loss at a place where you definitely don't want price to see going, right? That's this high. So that's why we shorted here, put the stop loss here. RR is a little bit wider, but you're targeting a target way down there, right? So the RR is still okay. And then we shorted another one once the 1 minute lined up over here. We did one more rate. That's why we put the stop loss over here, right? We don't know if there's going to be another rate, but it was lining up pretty well, right? Because we're respecting premium and forming another low. We did one more rate up, which is fine. If I look at the 5-minute, yeah, it's a little bit choppy, right? A little bit choppy at the start. So overall, this is how I personally align time frames when I'm looking for a high probability trade, to see if all time frames line up with each other, and then I can confidently say, okay, now we definitely shouldn't go to potential high of the day during London or potential low of the day, etc. So I hope you like this little simulator, and subscribe to the YouTube, obviously, if you haven't already. Follow my Telegram. The link is in the description. I also have a Twitter where I post sometimes. And yeah, I wish you all a great weekend.